Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. You ever notice how quiet the financial world feels right now? Like everyone's holding their breath, waiting for something huge to happen, but nobody can quite name it? Behind the scenes, the gears of an entirely new financial system are already turning. A reset is coming. Not the dramatic end-of-the-world kind the internet loves to fearmonger about, but the kind history books later describe as inevitable. We've been here before. In the late 1990s, most people laughed at the idea of the internet replacing banks and newspapers. In the 1970s, people thought ending the gold standard would destroy the dollar. In both cases, a new system quietly replaced the old, and those who saw it early rewrote their destinies. Today, the same pattern is playing out again, except this time the rails of value are being rebuilt. And right in the middle of this transformation sits XRP, misunderstood, underestimated, and deliberately misrepresented. You've been told XRP is just another altcoin. You've been told it's dead, irrelevant, or worse, a security that can't compete. But here's the uncomfortable truth. The current XRP price is not real. It's a placeholder, a reflection of confusion, not clarity. And the moment regulation removes the fog, the numbers you see on the screen today will look like a historical typo. Let's start with the biggest misconception of all. Price equals value. If that was true, Amazon was worthless in 2001, Apple was a joke in the 90s, gold was trash in 1999. Every major revolution starts undervalued because its utility isn't priced in yet. Right now, the crypto market moves like a puppet on Bitcoin's string. Whatever Bitcoin does, every other coin follows, up or down. It's not because of fundamentals, it's because of sentiment and liquidity dominance. But the tide is turning. The market is evolving from hype-driven to utility-driven. That's where XRP's story begins. See, most retail investors think XRP's quiet price means it failed. In reality, it's the opposite. Utility networks don't explode until the infrastructure around them is legalized and institutionalized. Right now, XRP is essentially a commercial airliner idling on the runway, engines humming, waiting for the control tower. Regulation to say, cleared for takeoff. We've seen this movie before. Before the stock market boom of the 1930s, the U.S. created the SEC and the FDIC, regulatory clarity that restored trust. Before the internet boom of the 1990s, the Telecommunication Act set rules for digital communication. Every breakthrough technology stalls in chaos until the rules catch up. That's why XRP feels frozen, not because it lacks purpose, but because its purpose is too big to run in a gray area. Its current price is an illusion, a reflection of uncertainty, not demand. When the rulebook finally lands, the artificial ceiling disappears. Across Washington, D.C., something extraordinary is happening. After years of lawsuit and confusion, regulators have stopped fighting if crypto will exist and have started defining how it will exist. The SEC's tone is shifting from courtroom combat to collaboration. The Treasury is drafting frameworks that weave digital assets into the fabric of U.S. finance. Bills like the Clarity Act and the Stablecoin Innovation Act aren't just headlines. They are the early chapters of the regulatory revolution. History repeats itself. In 1933, the FDIC insured deposits and rebuilt trust after the Great Depression. In 2008, new banking regulations stabilized the broken system after the crash. Now in the 2020s, digital asset regulation will ignite the next wave of legitimacy and liquidity. Once that switch flips, every institution that's been waiting on the sidelines, pension funds, hedge funds, Fortune 500 treasuries, gets the green light. They won't be guessing anymore. They'll have compliance manuals, insurance coverage, legal pathways to hold crypto, specifically utility-driven networks that can move money efficiently. And that's where XRP shines. Because unlike speculative tokens, XRP was built for compliance from day one, fast, traceable, auditable, and energy efficient. For years, Ripple and other developers have been sitting across from central bankers, not meme coin promoters. They've been mapping how to connect fiat systems to blockchain systems securely. It's not the flashy side of crypto, but it's the foundation of the next era. Regulation isn't the end of crypto freedom. It's the legitimization of crypto reality. And when that legitimacy arrives, trillions of dollars don't flow in slowly, they stampede. Here's where the script flips. When people hear utility, they think it's boring. Utility is the difference between a toy and infrastructure. XRP isn't built to entertain retail traders. It's built to move value the way the internet moves information. Cross-border payments, remittance, instant settlement, that's its DNA. Think of the world's financial plumbing as an old telegraph system. Messages, money, travel but slowly, with fees, and middlemen relaying every signal. Then imagine replacing the telegraph with fiber optic cables. That's XRP's role, turning analog finance into real-time digital flow. Banks in Asia, the Middle East, and Latin America have already tested corridors using XRP for on-demand liquidity. Transactions settle in seconds, not days. Costs drop from dollars to cents. But here's the catch. Those pilots can't scale fully until regulation allows volume. It's the same as testing electric cars before governments build charging stations. The tech works, the environment just isn't ready yet. Ripple has quietly laid tracks for over a decade. Partnerships, APIs, payment corridors, all in place. Second the law says go, those corridors light up like runways at night. And once utility activates at scale, market psychology shifts forever. Because when XRP starts settling real global transactions worth billions daily, price stops being about speculation and starts reflecting throughput demand. That's when you see independence from Bitcoin's shadow. XRP won't need Bitcoin's hype to move. It'll have its own heartbeat utility. Now let's zoom out. The real endgame isn't just payments, it's tokenization. Every major asset class on Earth, bonds, equities, real estate, commodities, is migrating on-chain. We're talking about hundreds of trillions of dollars currently strapped in slow paper-based systems. Tokenization unlocks liquidity the same way the stock market once unlocked private ownership. Imagine owning 0.001% of a Manhattan skyscraper or trading bond yields across borders in seconds. That's not fantasy. That's 2025 reality. And the networks capable of handling the volume must be lightning fast, reliable, regulation friendly. Bitcoin can't. Ethereum struggles. XRP was engineered for it. It's the railroad analogy all over again. And in the 1800s, whoever built the rails controlled commerce. Today, whoever builds the digital rails controls capital flow. Each XRP transaction is a train car. Each ledger updates a track switch. Efficient, frictionless, unstoppable once the system connects. Ripple's focus on interoperability, connecting different CBDCs, stablecoins, and asset tokens positions XRP as the universal settlement bridge. When a euro-backed stablecoin meets a dollar-backed bond token, something has to settle the difference instantly and transparently. That something is XRP. This is the quiet revolution few are watching. While retail traders chase meme coins, institutions are quietly running pilots with tokenized treasuries and corporate bonds. They're not guessing which dog coin will pump. They're engineering trillion-dollar systems. Look at the map. Europe already passed MiCA, giving clear rules for digital assets. Asia is tokenizing trade, finance, and exploring blockchain settlement for exports. The Middle East is positioning itself as the digital asset crossroads, and America is racing the clock. Because whoever sets the global standard for digital asset regulation doesn't just lead finance, they lead geopolitics. The networks running tokenized assets will define the next century of power. That's why the U.S. Treasury, SEC, and Congress are suddenly moving in sync. They know if they don't act, someone else will rewrite the rules. And when those rules arrive, every major institution waiting for clarity will execute instantaneously. Liquidity corridors will surge, tokenized markets will explode, and XRP, the bridge already built, becomes indispensable infrastructure. You've been lied to about XRP because the truth doesn't benefit the old system. The truth is that XRP isn't competing with crypto. It's competing with the plumbing of finance itself. Price suppression, confusion, lawsuits, they weren't coincidences. They were friction from transformation. But history always favors utility. When regulators finally align, XRP won't just rise, it will reprice to match its role in tokenized economy. And when that happens, we'll look back on this era as the same way people look back on dial-up internet. Slow, noisy, and unaware of the storm about to hit. So ask yourself, when the light switches go on, do you want to be staring at the runway or already in the cockpit? Because the tower's about to say cleared for takeoff. This opened your eyes. Smash that like button. Ring the bell. Leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.